Let's talk through Bitcoin. It's up over 13% this year. It depends on when people are seeing this, in the ballpark of probably 105, 120 grand, 107,000 or so today. And was topped out around $118,000, $120,000. So first chart I want to put up here, Jim, as you scroll down there a little bit, is Bitcoin performance versus other asset classes over the last 13 years. And so what different people are seeing here is every single color on this table represents a different asset class. And so what's interesting is your eyes instantly are pulled to, well, that gold is either at the top or at the bottom, and that is Bitcoin. So last year, Bitcoin did about 120%. The year before that, 159%. But the year before that, it was down about 64%. So, and it looks like Bitcoin kind of every 4 years goes down about 60 to 75%, and then it rips back higher. So if that's the case, then maybe 2027, 2028, it's going to go down 67%.
Yeah, one thing people need to understand the mathematics is if you lose 50% of an investment, you don't need just 50 to get back to even. You need 100% to get back to even. So the downs hurt you more than the ups help you. But yeah, Bitcoin has had some incredible years. That's for sure.
Yeah. All right, let's talk about this within the context of asset allocation. So Bitcoin has, whether people like it or not, it is an established bona fide asset class, especially over the last 2, 3, 4 years. And with the current administration and White House and the crypto czar, David Sachs, providing a legal framework around this and some of the new laws coming into place, I think we're only going to see more tokenization, more crypto, more blockchain, which I think is good overall. And Bitcoin seems to be a benefactor of that. But I pulled some data here from Crypto Asset Management, XBTO is the source, and it said 74% of investment professionals have invested in cryptocurrencies, so that's a decent amount. And it says 86% of billion-dollar plus single-family offices are considering crypto since the presidential election. So I think they're seeing Trump legitimatizing this. There's a legal framework, and it looks like now billionaire family offices are actually starting to build a stake in here. I just saw that Harvard just built a stake, a 9-figure stake in their endowment. But it does say that average family office crypto allocations remains about 1 to 2% of the total portfolio within that alternative bucket. So what are your thoughts on ultra high net worth, billionaire family offices, fractional family offices, what we do, allocating towards crypto and Bitcoin? Well,
I know I personally allocate toward this area a little bit, but a little bit is the key. And I think just like any asset class, you don't want to be over-concentrated. And like you've heard me say many times, you get rich by being concentrated, you stay rich by being diversified.
Right.
And generally, people get rich by being concentrated in a small business. There are, I'm sure, people who've gotten rich in cryptocurrency, but those are very few. There are a lot of people who've lost their entire life's savings to, crypto as well. Crypto still I put in the category of speculative. Why do I say that? Because the only reason you buy crypto is because you think it's going to go up in value. The only reason you sell it is because you think it's going to go down in value. Now, you might be listening and think, well, isn't that every investment I make? Well, no, because unlike if you buy, let's say, Apple has buildings, employees, products, a pipeline of new products. They have intrinsic value. They have cash on the balance sheet, huge, more than the GDP of small countries. And I'm not promoting Apple stock. I'm just saying that you would buy Apple stock, yes, because you think it's going to go up in value, but also because it has this intrinsic value. It's got all these things that you know are valuable within this company. With crypto, there is none of that. It's not like they have cash reserves or employees or products or anything else. And so for that reason, it's in the speculative phase. Will it ever go out of that in some way? Possibly. But I do believe it's a diversifier. I do believe it's something that can make great returns, as you've shown in your portfolio. You just want to make sure that you're investing the amount that you can afford to lose and that you have that balance throughout your portfolio and are not too concentrated in that area.
Yeah, and I know we're talking about Bitcoin in particular, which is like there's really no economic use of Bitcoin besides the medium of exchange. Now there's Ethereum and there's others that are essentially the rails for the crypto. So that could change with blockchain technology and other stuff, and we'll see where the future goes. But there hasn't been as many practical use cases as I think people thought 3 or 4 years ago. So to me, the narrative has changed a little bit that crypto is more of a store of value and a diversifier, and it's really only worth something as long as everyone thinks it's worth something. And gold actually has probably even more applications than crypto, but there's the same argument against gold, but it's used in some machinery, mechanical stuff, and jewelry. But still, it's more of like people just think it's valuable, so therefore it's valuable.
That's exactly right. And what's interesting about crypto being called a currency it really doesn't function as a currency. Maybe it will one day. And I know there's some third world countries where it actually functions as a currency. But in general, you and I are not going to go to the grocery store and use Bitcoin to buy our groceries. It's not really working as a currency. And by the way, if it ever works as a currency, this buying and holding will go away as far as a way to make money. And what I mean by that is if I bought a bunch of euros and just held them, in 10 years, would I have, if I bought $100,000 worth of euros, in 10 years, I still have $100,000 worth of euros. But if I buy $100,000 worth of Bitcoin, I could have $1 million of Bitcoin in 10 years. That's not how currencies work, because currencies move against each other. So if I'm going to make money in true currencies, I'd have to buy euro when it's cheap, and then as it goes up in value, I'm going to sell it and exchange it for, let's say, US dollars. So it's exchanging the currencies, because if one currency gets too strong, then the cost of goods and services changes, and then money starts moving the other way and then moves that currency in the other direction. That doesn't happen with Bitcoin. It can go up and up and up, and that's why it really doesn't function as a currency.
I think there's a lot of stuff that we could attack in what you just said, but I'm just gonna let it all go because to keep this thing going, I don't disagree with the thesis of what you're saying right there, but I do want to talk through digital gold. And so I think that's the thesis that if you are allocating capital to Bitcoin, let's just say as an asset class, I think the thesis is, hey, this is like a digital version of gold, and it's going to take market share from gold, or maybe increase the TAM of an uncorrelated asset class from gold. And then the next chart that I put together here, or that I found, I should say, is the correlation matrix, which really just shows, okay, hey, if something goes up, 1%, how does it tend, or how do these other asset classes tend to do? So for example, if Bitcoin goes up 1%, the correlation of the S&P 500 is 0.55%, meaning that they tend to flow about, like the S&P 500 tends to move about 50% of whatever Bitcoin does, whether it's up or down. The correlation of gold is 0.16%. So actually Bitcoin and gold are really not that correlated. But then if we looked at this, which isn't in the chart here of the NASDAQ or the QQQs, the correlation between Bitcoin and the Qs is actually a lot higher, meaning that when Bitcoin tends to go up or the NASDAQ tends to go up, the other tends to closely follow. So what are your thoughts on that? I think part of the thesis here is potentially a hedge against the current, I'd say, currency system and the Federal Reserve. There's kind of that angle. There's also the, hey, this is an uncorrelated asset class angle, kind of like what gold has served as the thesis for a lot of investor portfolios. Where do you think this is coming into play?
Yeah, I do think there's a diversification piece on this with cryptocurrency and Bitcoin in particular. One thing I will say, though, is what I see a lot of very smart people doing is they compare Bitcoin to things that have been around for 100 years. And Bitcoin is such a new thing, it's really hard to know how these correlations are going to actually match up. If there was everything falls apart, does Bitcoin fall apart, or is it up while everything else is down? And making too much of a read on the short lifetime of Bitcoin, and really, if you go back to when Bitcoin started, it really has come into play in more recent years. Even though there's a longer track record of it being around, people actually investing in it and understanding it and being aware of it is relatively recent. So I would caution people from making too many conclusions about how this is going to work in your portfolio versus, real estate and stocks or something like that we have incredibly long track records on.
I guess the pushback there, though, is that Bitcoin does trade 24/7. Stock market, as an example, is only trading during the day. So although I agree from a timeline, I think it's 2011, so maybe only 14 years or 13 years there. But right, from if you were to zoom out of actual trading time, it's actually a lot longer in terms of the data than just 13 years.
Well, I guess that's true, but 13 years versus 120 or 150 years.
I agree. But trading 40 hours a week for the stock market versus 24/7, I think there's a lot more data as well. I agree with you overall.
Yeah, I just thinking, what have we really seen as far as, we saw the COVID time. What have we really seen as far as dramatic economic times where asset classes act in strange ways?
Yeah.
We haven't seen a lot of those with Bitcoin, but I'm not disagreeing with you as far as Bitcoin can be a good diversifier. And like I said, I've got money in Bitcoin and Ethereum primarily and some other stuff, but it's not, not that I'm a billionaire family office, but I'm kind of like the billionaire family offices that I don't have a large percentage. And we see entrepreneurs that'll have, 50% of their money in Bitcoin. And that you just got to be careful, because then you're talking about that could make you rich or that could make you poor. And it's really hard to predict where this is going. in my opinion.
Yeah, I'm with you. I'm just over 1% of my total allocation as well in cryptocurrencies. And I think when we're seeing the parameters of like that 1 to 3%, 1 to 5%, I think for some folks who want to get some exposure, maybe buying the Bitcoin, the Ethereum, the biggest kind of by market capitalization coins, it's just a way for them to get some exposure, ride the asset class up. But to your point, when there's these halving cycles that have happened in the past, you're not losing, if you have 50% of your allocation in crypto and then you have a halving cycle, you just lost a quarter of your net worth. And it can happen really fast, which for some people, if they're in it for the long game, it can work. But it's if it's a substantial amount of money, it's sometimes hard emotionally to recover from seeing that many red dollar signs on your computer screen.
Yeah, when I see some of these drops, like some of the down years with Bitcoin and how dramatic it is, how volatile it can be, when I see an asset class like that I want to invest in, I especially like dollar cost averaging, which is putting the same amount of money each period of time, whether it's every 2 weeks or every month or every week, but the same dollar amount with the same time frame over and over and over in that investment. And that's what I do with Bitcoin and Ethereum. I put money in every single month, and then when prices drop, I get more. When prices go up, I get less. And over time, that helps me, at least mentally and emotionally, work through the volatility of something like a cryptocurrency.